We got it all covered. Breaking down today's action, Jamie Cox from Harris Financial, who says there is one sector that is positioned to post the biggest gain in years. He'll tell us which sector that is. Jehn from Royal Oak Financial telling us why even more highs are on the way and how to play it. Mark Sebastian in the pits of the CME. He made it safely back to Chicago, I'm happy to say. Mark, the VIX, let's take a look at the VIX. It's down close to 12 handle now. It's almost below 13. Is it time to hedge that a little?
Yeah, you know, one of the things that's really interesting is how little the market...
It does have a 12 handle. It came below 13, closing at 12.93. Go ahead.
Yeah, 12.93. Now, to most outside observers, that seems relatively low. But when you look at actual market movement, the Russell 2000 over the last 10 days has had its least amount of movement in the last 10 years. The S&P has had the least amount of, it's right near its record low in terms of movement over the last 10 days, matching what it was doing in June. So we're seeing the market crawling at this incredible snail's pace. So why is the VIX at 12.93? I'll tell you why. It's because there is still some buying pressure on puts. Now, what does buying pressure on puts tell us? It tells us that the market is that big money managers are still buying downside protection. They're willing to give up a little bit of upside to make sure they don't catch a lot of this downside. Money manager doing it, the retail trader should be doing it as well. So when the smart money is in there buying puts, what that says is they like upside, but they're a little scared.
Gotcha.
That's kind of the way I look at the way the market is right now.
I don't know, Jamie, are you scared? I'd call you the smart money because you have been bullish when others weren't, and it was the absolute correct call. What are you now? Is there a tinge of fear within what you're doing?
Well, you got to look beyond the U.S. I mean, we see all these records with the NASDAQ, the S&P, and the Dow Jones Industrial Average, but that's not really the story. I mean, the story is overseas. I mean, we haven't seen any type of performance like that in Europe or in Asia. And with all that easy money over there overseas, that's where the markets are going to be best.
Can I just say, though, Asia and certain Asian markets hit multi-year highs last week.
Yeah, I mean, you're seeing a lot of people come in and realize that the emerging market's doing well. But remember, Europe is that weak spot. It has been for a couple of years. If you look at the DAX, it's up over, it's double digits already. So that's where the money is to be made this year. Even though you're seeing records being set all over the place in the United States, this is not the best market.
By the way, we mentioned Asia. Yeah. We have one of the top Asianologists, a guy who's just come back from China. He's going to be with us coming up within this hour. You don't want to miss that. Matt, you think it's going to be a very strong spring, even stronger than the times leading up to it. That means new records. Couldn't, however, this cold winter that we've had be a drag on growth and a drag on profits as we saw last year?
David, I don't think so. I think we have the perfect trifecta going. When you think about low oil, how that's been a godsend for both consumers.
But hold on a second. That
hasn't,
hold on. Matt, that has not panned out in retail sales.
No, I think it has because, well, you're going to see it pan out because the low oil, increased wages that we're about to experience, and then the spring being around the corner, I think is setting up for the perfect trifecta. Plus, if we get confidence from this, it's going to do well. Hey, the song remains the same. We feel we're fully invested in the stock market, and we're invested right here in the United States. I think consumer growth and consumer-driven products here in the States is what's going to really catapult this market forward.
So no effect, Matt, hold on a second. No effect from the winter at all? Is that what you're saying, despite these record low temperatures we've had in the East?
You know, I don't think so. It hasn't been as bad as it was last year. Now, you know, obviously in Massachusetts, a little different story.
Don't tell that to the folks in Boston.
But hey, look, spring's around the corner. And like I said, low oil, increasing wages, that equals confidence. Confidence, the cheapest form of stimulus we can have. It's the perfect trifecta going into the spring market. My concern is with the 4-month extension that was given to Greece. That's when I think things start to really fall apart, is when Greece comes back on the table in 4 months. That is all going to be a disaster. And that's when maybe we want to get protected and pull back from the market. But until then, things are good.